The following is a presentation of TFNN. Live at TFNN, the Money Masters. And now, your Money Masters, Tom O'Brien and Steve Rhodes.
Welcome, folks. This is Steve Rhodes, Tom O'Brien. Thanks for being with us. We really do appreciate it. Market-wise out here, we get the Dow up 68, NASDAQ up 26, S&Ps are up 10. You get the gold contract up 23. Silver's up 50. Bonds are down 25 ticks. Dollar's down 58. We're at 77.32. Yen, we had some action in the yen last night, up 67 at 77.32. And,
oh, absolutely. Hey,
we're howling, baby.
Let me tell you.
We're howling.
At 3 a.m., I went out on the balcony and howled at the moon.
That's a beautiful thing.
It was this nice big, well, it wasn't big. It was this nice small full moon last night.
Yeah,
because it's furthest from the sun. So this cycle, it's actually furthest from Earth. And that's what took place this morning at about 7 a.m.
Is that apogee? No.
Apogee, yeah.
Apogee is
that's
furthest.
Right, that's right.
I got okay, cool.
That's right.
Man, cool.
Yeah,
it was beautiful, but I see the difference now. Okay, so
yeah. So because when I went out there, it was smaller, so it wasn't giving off that big light.
Right.
And so still now it's when the moon is spinning at its slowest point as well, but it's about to make that turn, baby.
I know. And folks, what Steve does here, okay, and this is so cool because if you're following this, it's pretty amazing, okay, that we're at the swing points.
We're at the swing points.
We've had 2 days coming into swing points with no juice.
That's right.
We got the moon happening.
Yep.
You got Apple at 408.37. Yes. I'd love to see this thing tag 411.
Right, exactly. Exactly.
This would be just a present to tag 411. And what 411 is, folks, is that's the lows of the high.
That's right.
It wants to tag it.
Yeah.
It wants to tag it. Now, what is intriguing here this morning is that what seems that what we should have got here, folks, right off the bat, is wide price spread. And you don't have it yet, And if you can't get it in the next hour, let me tell you something, you'll see that turn come, and it'll be pretty intense.
Yeah, yeah. On Apple, all you had was, you got its third gap, its third open window.
Yeah.
Right to the 0.786. So even if it doesn't tag the low.
Oh, I like that.
Okay.
Yeah.
So, yes, to finish the test from a swing point standpoint, you and I would both love to see it get to the 411.19.
I didn't see
get
that
to 411.20.
Oh, isn't that pretty?
Exactly, which is kind of cool.
Yeah.
Because then we have it all, right? If you get to 411,
yes.
Okay. And then and it closes right in around this range or what have you. Got the 3-gap play, a test of that swing. Now, what's really cool? Folks. Now, what's amazing here too is that a 3-gap play. The first where the gaps go is that's where the stock wants to go. Right.
So this is pretty intense because
which all makes sense.
Yeah.
When you take a look at the volume at that swing point.
That'd be saying that number one, you want to get up there. Number two, it'll come all the way back to the other swing, the lower swing, and then it will take off again.
Well, that's if it's coming in there with some lighter volume.
Cool,
yeah, yes, yeah,
oh,
which would be which would be nice, and that's what Apple needs. As a stock, it now needs to come back and test that swing point that's got 44 million. I mean, I was showing on my show here. You take that swing point, it's got 44 million. You go all the way back to August 8th, you've got 40 million, and then just go to the highs. You go to the July 26 high, you got 17 million shares, 17 versus 40.
Yeah.
And then you go back to this high that we've had up at September 20th, 27 versus 44.
Right.
Come on.
No way. Right.
Right. It's not sustainable.
No.
Not unless you've got some big funds that decide they want to come in now and blow through that high.
Yeah, no, it's not going to do it. It's in the consolidation, a very large consolidation, so it can build some cause, for them.
And a nice consolidation area. And you think about, you take a look at the volume that took place also on October 4th. So you had that big 44 million volume day, and today is really all about greed, right? Today is where you've made 15% on Apple in 5-6 trading sessions,
right?
At the 786, right? So you got folks that are saying, hey, that's not a bad deal.
No, absolutely.
Right? On their trade.
Absolutely. Hey, I got the numbers, too. Okay, so Steve and I have been talking a lot about the well, Paulson in particular, in the gold market.
Yeah, okay, yeah.
And in particular is that what these funds own. Okay. So this is how the rule works, folks. Okay. So the 13F filing, right?
Yes.
So what happens is this, is that September 30th, they have to tell the public what they owned as of September 30th.
Okay.
But they have 45 days after that to file it. So November 15th is when we will get all those numbers.
Okay.
Yeah. You know, I hunted it last night because it was driving me crazy.
Yeah, right.
About the aspect, and see, specifically, folks, inside the gold market, is because you have Paulson that, owns so much of the GLD, he's already selling Ashanti. On the last filing, AU, he's already selling. And he owns, which is amazing, he owns 85 million shares of this.
Yeah.
Okay? And that's dangerous. Okay? But he did start selling that in the last filing. I expect we're going to see more of that. And the real wild card, of course, is that has he started selling some of the GLD? What was kind of, it was really intriguing, is that, even his best years, and this guy's been up monster money. Even in his best years, his investors have taken out 10%. So even when he's been up 200 or 300%, which he's been up, they've taken out 10%.
Yeah.
So in that context, folks, it would just make sense that we know that at least 10% will come out. Now,
and he knows that too. So he's got from a money management standpoint,
that's right.
And what he wants to do is he wants to get that all sorted out before he actually files and plays his cards.
He has
right?
to. Because he's going to know. Yeah. He's going to know also that if that thing is happening, that's right. There's a problem there. Do you know what I mean? Now, what I did yesterday also is this. So check this out. This gets really interesting. His fund, the gold fund, right?
Yeah.
Is up 1% year to date.
Okay.
But what I took is that I took his GLD position, right?
Yeah.
And his GLD position, folks, is in a huge game. Huge. Okay?
Okay, yeah.
So that means that between the gold shares and the derivatives he's put on the gold market, he's lost.
That's how he's gotten lost. Okay.
He's lost.
Okay.
Okay? Now that is dangerous. That is really dangerous because I just hold it, man. He's in at the right price.
Yeah,
why
we're looking at
and so that means that something inside that, folks, okay? And now that would make sense in the gold shares because a lot of people are wondering, oh my God, gold's up, and why isn't
right.
Particularly what you're talking about, even in mutual funds, they've got killed.
Yes,
they've got killed.
Oh yes,
okay.
Yes.
I mean, it's crazy. So as we move along and watch this play out, folks, this is where you can actually take the technicals. You can take the fundamental aspect of where that supply and demand really is,
right,
and get your head wrapped around it as to how, when big whales come in and how they come out, what it affects.
Right. Oh, well, absolutely.
I heard J.P. Morgan this morning, so check this out. This is interesting. If you listen to CNBC this morning, folks, okay, they had the chief strategist of J.P. Morgan on.
Okay.
And let me tell you something. You have to love the option hour, okay? We get Victor. Victor's out there doing it now for Don Kaufman. Victor's the new guy.
Okay.
He's going to be doing the option hour.
Okay.
But if you're one of the tigers or tigresses out here, I bet you picked this up too. The chief strategist for J.P. Morgan Chase was saying to Joe and the rest of them on there this morning that they have a target for $2,500 for gold. Now, the reason that they have that target, listen why he was saying this.
125.
Oh, no, the 2,500.
25. Hey, wait a minute. That's a new target.
Would be that would be... That would be
I'm listening.
No, that would be heavy C. But listen to this, folks. This is pretty amazing. So the reason that they have this is that the volatility spiked to 30% inside the GLD and the GLD VIX. Okay? So he was explaining that, well, if that spiked like that, then that's where they got the price. And I'm saying to myself, this is amazing. Okay, all the volatility means, folks, if you listen to the option hour, it can go either way. It just means that the move is going to be 30%.
Yeah.
So they brought nothing up. It's like, hold it. That means you can go 30% down.
Right.
Yeah.
Right. That's right.
Right. It's crazy. I mean, and they were basically, he was feeding them that. So I can't wait for the next time that I'm on because I know. Kerner will bring that up in that aspect. I know he will. Because the last time I was up, he had said to me, he says, you're throwing in the towel, Tom? This was in 1900. It's going to 25. And it was for the same guy. I said, no, I'm not.
Yeah.
So the next one will be, more than likely, it'll be the concept that, well, hold it, the volatility's out there. Well, you know what? Yeah, the volatility goes both ways here.
Well, look, gold is I give it more of a chance. Look, eventually 2,500.
Oh, yeah.
Okay?
Oh, yeah.
So
yeah.
no problem with the eventual
right. That's
2,500.
Right. That's right.
But gold has more of a chance to get to, 1530 than it does to, and we're only at 1863. It's got a better chance to get back down to the bottom of that consolidation.
Yeah.
If it breaks through that, it's got a better chance to get to 1400.
And it wants to build a base.
Yeah.
And it wants to build another floor. And that's not the end of the world. I mean, that's my reality.
The only thing, where I'd throw the cards out the window, if you will, is, if there truly is some other type of QE program out there.
Yeah.
You put a QE program out there and then, okay. Then I can buy into it. But you keep the money, if you keep everything the same, then...
Well, the good news yesterday, and John and I were riding home last night, and he says, the good news is that no one's getting along in Congress, so it's perfect. Because if they don't do anything, we're all set. That's the real, and that's the real bottom line.
Yeah.
It really is.
Yeah.
Folks, we're 10 times better off, right? If all these, politicians basically stay out of it. I mean, that's a fact. Because they all want our money. That's the bottom line.
Yes.
Whether it's a Republican, a Democrat, they're all stuffing money somewhere. Big money too, not small money.
That's their
Did
deal.
you get your green check yet?
My green check? No, I haven't got my green check.
Hey, you get your green check yet? Where's your green check? We need those green checks.
I'm not on the green check mailing list.
Oh man!
Not that I'm not green.
We better get that green check mailing list. How do you get on that mailing list?
I don't know.
I think you got to know
somebody.
I think you have to get some lobbyist.
Is that it? Okay.
Well, you talk about a return on investment. I think we're in the wrong business. Folks, we might change this business. I think we probably should get on the lobbying business, meaning that, so you give a lobbyist $1 and you get back 10, right?
Yeah.
And you rip off all the taxpayers.
Yeah. No.
Yeah, I know. That's what they're doing, though. They're ripping us off. Big time. Okay, so what is this market doing? Let's see, so the Dow's getting a big number here. The Dow's up 117. That's going after, we're 11,500, so it's into the swing right now. That's 11,700. The SPY, she's up $1.60. She's into the swing. All the swings are in play, folks. Big time here.
They are. And when I open up the show, first what I do is I just go around the world because there, we're going to close. Early, and that's where we're going to get a big piece of information. And so we got what I was looking for. You wanted to see the DAX get into the swing point from August 15th. So the low on that was 6,008. You're trading at 6,014 right now. So at 11:30, we're going to get a big piece of information. If it goes below that, it's signaling that portion of the move is over. The FTSE has done the same thing. It's also inside a swing point. That's going to release information for us.
You got to love it, right?
You do, yeah, because that's what we're looking for is information, what to do next.
It's a one-world deal, folks. You stay right there. This is Steve Rhodes, Tom O'Brien. We get the Dow up 118, NASDAQ up 34, S&P's up 17. We're going to be right back.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Is the fast-moving investment world challenging the way you think about managing risk and return? You don't have to go it alone. Directions Alternative Strategy Funds feature built-in tactical management to help you find clarity for the path ahead. Direction Funds. I'm with X. To learn more about Directions Alternative Strategy Funds, please visit TFNN.com and click on the Direction Funds banner or call 877-434-9363. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Funds carefully before investing. The prospectus contains this and other information about Direction Funds. The prospectus should be read carefully before investing. To obtain a prospectus, go to directionfunds.com. Investing in index funds may be more volatile than investing in broadly diversified funds. The use of leverage by a mutual fund increases the risk to the fund. The more a fund invests in leverage instruments, the more leverage will magnify gains or losses on those investments. Distributed by Rafferty Capital Markets, LLC. Looking for some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's just wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Welcome back, folks. Thanks for being with us. We have the Dow right now up 109, NASDAQ up 32, S&Ps are up 15. And, of course, we get the 210 last night. You get the full moon happening.
Yeah.
And so the setup here, right? After today, we know that the big dates are coming.
The big date then becomes October 26th.
Which we could go right downtown, right into that.
You could. You absolutely.
And today's the 11th.
I say, look, it's one of really two options. Knowing, that somehow, this full moon here is not a turn. Okay.
Yes.
And normally, we have been, if we go back to August 24th. We've been buying the full moon, okay, and selling the new moon. But you really have to dig down further than that,
right,
to just really understand.
Right.
That's what my clients get an opportunity to see. You get to see, if you will.
Folks,
really understand the work.
You have to see what he sends out and what is on those charts. It's really cool.
Yeah,
man.
because when you do that, then it opens your mind, and then you're kind of to what's really going on,
right,
and what you're really looking for. So if, let's say, the market it not only moves up today, it gets into these swing points, it does it with volume, closes at its highs, or what have you. We don't see any kind of failures, if you will. Then you could easily see where the market could actually move up.
Yeah, right.
And you can easily go back to any of the indexes, any of the ETFs, and draw your retracement down from the top,
yes,
okay, all the way down to the bottom of the
That's
consolidation,
right.
And then you're likely going to go up to that 0.618 area.
No, I'm with you.
Which would be a big explosive move,
right?
But then knowing what it is that certainly I know about this P index date that's coming up in October. That's going to be real important.
And that's what's so cool, folks, is that if you look at the pattern and you pay attention to it and you put your trades on there, that's why you can basically keep your trades at a 1% of your portfolio and keep your stop so tight.
Yeah,
and it makes a huge difference. It absolutely makes a huge difference.
No, it does. You know, it really is about the position size. In fact, a week from today, I'm doing a free webcast from 6:30 to 7:30, and it's really all going to be about the position size. I'm going to show the position size calculator, but really, you know, it's really the money management strategies,
right?
You know, that the real money masters, if you will, that they really use, that they put into play,
right?
And that 1% thing, you know, what I found is that, you know, look, we're all so busy doing so much stuff. You know, and you really do need to leverage folks to be able to do work for you in order for you to be able to focus on what you need to do.
That's right.
You know, I mean, I leverage people so that I've got the time, so that I can spend, you know, doing what I do.
Right.
But what that means is the folks that you leverage, you know, you really need them to be able to dig under the covers and do the work.
Exactly.
You know, and find stuff out there that you're not going to hear about that just anybody can, you know, can
including telling them, this is what you should be risking, and this is why, and don't go over your head.
Yeah. Well, because, you know, when you yes, people want you to put your money into the market, but they don't want you to understand the money game and how you could really play it and how you could really win, because it's you against, you know, if you're a buyer, you know, you're going up against the seller.
Yeah. Totally.
Right? Okay.
Totally.
And, you know, and the money managers, most of them, not all of them, but most of them, you know, they've got to stay fully invested. Okay, and so all they're going to do is rotate from, you know, some weakness into what they think is strength, but there's still going to be a pullback when you're in a bear market.
No,
and we're absolutely in the worst bear market.
Oh,
and you know, and on CNBC, you know, it's like it goes from. I'm not, you know, harping on them or anything like that, but you know, look, they're out there to sell positives and positive news. I want people to understand the market is going to go up and down, and that's a positive thing. When it's going down, it's also positive. You know, and we just need to teach people about that and how they can really play it.
Absolutely. And folks, what happens is this, okay? If I've learned anything about the marketplace, I remember when, you know, I was first getting my head wrapped around it, I'm saying to myself, there's so much stuff in the marketplace, and there's so many different... So what you want to do is just take one aspect at a time. That's what I really... If you focus on one aspect, go to the next one.
Yeah.
Now, what you can absolutely do at the same time, however, is remember these cycles and remember what people said in these cycles, okay?
Yeah.
So this morning, right? Now, Alcoa, okay?
Right.
Alcoa.
You called that yesterday off the air when we were talking about it. You were like,
let me tell you something.
You were all over that.
Let me tell you something, folks. Alcoa is the biggest joke, you know, as to a public relations and pushing people into the stock that I've ever seen.
Yeah.
You know, and this is why. Okay, so picture this. When I was first, you know, when the commodity bull 2000.
Yes.
I'm looking at Alcoa, and I'm saying to myself, well, you know, that's a commodity that should be able to move, no problem. So I always watch it quite a bit, and you know, stock went to $40. It did all right, but it should have went a lot higher.
Yeah.
Okay, bottom line. And what it is, folks, is that they absolutely do not have their cost under control. Okay, so that being said, wait till you hear this. This just absolutely is a mind blower, though. All right, so what the CFO and CEO are blaming now on is that the cost of energy went down, so they made less money.
Oh, now, no,
I swear to God. I swear to God. If you go back...
I thought they were just blaming China.
No, what you have to do is this. If you go back, okay, a couple of years when the cost of energy was going up, that's why they weren't making money.
Oh, my God.
You got to love it. And it is the second one, folks, okay? Aluminum, it takes a huge amount of energy to make aluminum. You stay right there. We'll come right back.
This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
Tom O'Brien's weekly newsletter, The Gold Report, gives traders, investors, and money managers a thorough strategy for trading the gold market. If you're an investor in gold or any of the gold mining equities, This newsletter is an essential tool that can help you become a better trader in the gold market. The Gold Report comes out every Monday with complete coverage of the entire gold market, including the XAU, HUI, the dollar, the bond, the rand, more than 40 different mining equities, as well as some of the most popular precious metal ETFs, including the GDX and the SLV. For as low as $75 per month, you can gain access to Tom O'Brien's Gold Report that will help you take advantage of investment opportunities at the current historic gold price levels. To order your Gold Report today with a free 30-day trial subscription, log on to tfnn.com or call our office directly at 877-518-9190.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Welcome back, folks. We get the Dow right now up 117, Nasdaq up 36, S&P's up 17. You get gold up 23, silver's up 72, bonds are down a point, and the King Dollar is down 68 cents. Let's go see what King Dollar is doing over here. DXZ1. Okay, so she's, look at this. This is just beautiful. I mean, you're talking about 18,000 contracts going into the 44,000 contracts. And, you know, they've got the price going. There's no doubt about it. You know,
They do.
And the swing point here is 76.58. And I know, actually, 786 is somewhere in 75 somewhere, isn't it?
Well, you know, just simply the so-called dead cap, just the 382 retracement from the ABC up takes you to 77.54. So, you know, where close today is going to be helpful. You know, it's simply making a move. Right. Okay, so it's going right back to September 21st.
Yep.
You know, so you've got that happening simultaneously. You know, so it's got a little bit of everything. You're coming right into gap up.
And look at this when you go to the UUP. Now, the UUP, folks, is the power share. So you get volume up at the high of 12 million. You pull back yesterday with 3.7 million. Yeah. You're coming into 9.4 million.
Yeah, actually, the UUP right now is textbook. You know, if in the art of timing the trade, you'd have this one in here. You'd have volume coming down, and you'd have price coming down at the same time.
No,
right? I mean, that's the type of retracement that you want to see.
Big time.
If you're long, if you're bullish.
Right. Absolutely.
And which we are.
Right.
So
bullish the dollar.
Bullish the dollar.
When's your doctor's appointment? Oh my God! I'm telling you, man. Okay, so let's go look inside the Dow. What's happening inside the Dow here? So inside the Dow, you get the move is 3M, Caterpillar, Big Blue, and Walmart. Taken away from it is McDonald's, Alcoa, Verizon, and Hewlett-Packard. So let's go over to 3M first. Because inside the NASDAQ, folks, the NDX 100, most of those are all dead cat bounces. So 3M, same deal. This is wild. Look at this. 3M is going down from 96. We're at 78. You're coming right up to ICE, which is 78.06, and you're at 78.66. Now, Big Blue, that's a different ball game. So the Big Blue, she was at her highs yesterday. Oh, she's stalling. Oh boy. Okay, so this will get Big Blues need some wide price spread right now, folks.
Yeah.
You know, when you take highs or lows out, and you don't have wide price spread, it's problematic. You know, and right now, there's no reason that Big Blue shouldn't have wide price spread. But you know, we're not there yet. And if Big Blue closes under 185.21 today, that's the end of that deal. And what a consolidation that'd be. That'd be
my goodness.
That'd be 185 to 157.
Yeah,
which is pretty intense, no doubt about it. We take a look at Walmart. Walmart hasn't moved in years. Okay, so Walmart is at 56.18. We bring this back. Yeah, look at that. That's pretty weird, isn't it? If you I'm going to bring this back to 1980. If you want to see something that's pretty amazing. My God, that's crazy. So Walmart, folks, check this out. Huh? Walmart hasn't moved since 2000, 1999. How does that work? And Walmart controls the retail distribution. I mean, pretty amazing. But price-wise, I guess, bottom line is that they just can't get enough juice to get to higher highs.
You have probably, Microsoft chart doesn't look like that, I don't think. But when you get to be that large, you finally get to a stage where what's Walmart going to do? Start going out and acquiring retail spots? That's not part of their formula.
No, it's not. It's not.
So you've got that piece of it to look at. And all Walmart's actually doing is on a daily basis trying to get in touch the swing point from January 28th.
Amazing.
Yeah.
You stay right there, folks. This is Steve Rhodes, Tom O'Brien. We hit the Dow up 131, NASDAQ up 40, S&P's up 19. We're going to be right back.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Studies show that 10,000 hours is what it takes to achieve outstanding results, unless you use the power of leverage. The power of leverage, folks, is key to attaining outstanding success in your trading and investing. I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, and author of Mastering Probability, a daily trading and investment newsletter. Let me take your trading to a new level, a whole new level. Let me teach you the secrets that the real money masters use each and every day to produce consistent financial results. On top of that, I'll transform your life in ways you never thought imaginable. You'll overcome hurdles like an Olympian. Here's the beauty. I'm so certain that I'll transform your life. I'm giving you a 30-day unconditional money-back guarantee. Time, folks. Something you'll never get back. The time is now to take action. Go to the homepage of TFNN.com and order Mastering Probability. It'll change your life forever.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, did you sell us jewelry or did you buy coins off us?
Yeah, I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you know, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's just wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow up 124, NASDAQ up 38, S&P's up 17. And last night in Asia, folks, there was some action over here. You know, you had the Shanghai up 3.
Which had finally moved.
It finally moved. And so let's bring that baby up because, you know, what you have... Okay, so she did...
Oh, it did a couple of things.
Yeah.
I think it tested the low of the low of the swing point. Let's see, would have been 23.19.74. What did it get down to last night?
23.18.
Oh, that's amazing.
That is amazing.
That's amazing.
How's that?
All that work.
And exactly.
Oh,
and what you have, folks, okay, which is pretty cool, is that you came off this thundering.
You did.
You know, so...
you got a very, you know, because you came down there, you tested the swing point, and you got a very bullish candle also, you know,
and
at the same time.
And so, check it out. It's so cool. You've gone nonstop from 3,000 down to 2,300. So you were down $700, or 33%, without breathing.
Yes.
So we just may be talking about this a lot more because now we get a new tradable exchange, which is a beautiful thing.
Yeah.
You know,
yeah.
And this will get, you know, and on a larger context, of course, what you have is that this is down from 6,500, you know, so maybe 6,200, I think.
Well, it just depends where you want to go.
Yeah, 61, right, you know, so that's
yeah.
We're getting, that's going to be on the radar, no doubt about it.
Yeah, it is, and like it's got to work its way out. It's got to work its way up above the 25.61 area, you know. But this this could set up a nice trading range too.
Yeah, oh, big time, man, big time.
You know,
you want those nice, big, juicy trading ranges, folks.
Well, you know, I mean, what's so cool about it is it actually got down there and tested that swing point. You know, it's a weekly swing point.
Right.
It's a daily swing point.
It's crazy, right?
You know, no, it's great. It's really great because then what happens is the more that you start to see these patterns and how they unfold and the information that what it does, it helps to empower folks to be able to get over that fear of the information that's in here. And like you were saying, look, there's a number of different you know, patterns that we use, but that's just simply because of our years of experience. But and folks can acquire those in their toolbox. You know, we've got all the resources here. But what they can do, like you were saying, is they can just focus in on just one. And right now, today, when you take a look at what's been going on, just understanding swing point trading.
Yes.
You know, is enough right now for folks to actually be able to do it on their own.
Right. You know, it absolutely is.
Just have a couple of tools so that they've got access to some chart.
That's right.
You know, technology.
Exactly.
And they can do this on their own.
And understand, folks, that you put that money management in.
Yeah.
You know, you don't go over your head. Those things, if you get those things straight, you're going to be fine.
Yeah.
You know, and
you don't go over your head. You don't have to because look, it's just mathematics. That's the thing. It really is mathematics.
No, I know.
You know, and the reality is, you can sit down with any spreadsheet. You can go ahead and risk 1% of whatever your trading capital is.
Right.
And just the assumption is, because we always talk about 3 to 1. Well, I like to set the bar even a little bit lower because I know we can hit the high bar. But just go 2 to 1. You do there. Right. Just go 2 to 1. We're only making risking 50 cents, making $1.
Yeah.
Okay, risking 1%, whatever that is, and making twice that amount.
It's making
35 trades in a row.
Right.
You double your investment capital because you got also the power of compounding working for you.
Yeah, right.
Okay, and you talked about like direction shares.
That's right.
On the way up and the way down.
Right.
Well, so, 30. Now, I'm not saying you're going to have 35 trades in a row, but first you want to do is you want to put things into context that you can understand.
Yes.
And then when you take that same 1% risk and you just assume if you had 35 trades, losing trades in a row, well, look, to run out of your capital, to actually get down to $100, I don't care whether you start with $1 million, 100,000, 10,000, 8,000, works the same. It's just math.
Right.
Okay, 260 losing trades in a row at 1% to get down to $100.
That's sick.
So 260 versus, when you can kind of put it in those contexts and people can, now I'll show folks that on certainly next Wednesday. That'll be one element.
Okay.
And I created this position size calculator for my subscribers. They've been using it now for a few weeks. But it works for your system.
Right.
It works for Basil's system. It works for Larry's system. It works for anybody because that's just the money management side,
which is
of
huge,
the trade.
which is the name of the game.
Yeah.
Yeah.
And so wherever people are getting their information from, whatever newsletter or stuff that they do on their own, what then is so key is next is what next? How much?
Right.
How much? And I'm going to teach them the how much. And so that's why it's worth 30 minutes. All you have to do is just really go to the front page of TFNN, and on the carousel, just sign up for it. Great. It'll be a great time. We always have a great time.
That's right.
The same great time we have here.
No, totally. And
all day long.
But folks, you're going to learn so much. It's amazing.
Yeah.
I've learned so much off you. I'm not kidding because, there's two different aspects here. So picture this. You can know something. Okay, but seeing it, that's why I love how you set up your spreadsheets and the money manager. Seeing it and then seeing the moons, if you're a subscriber, when he's sending out the charts, folks, he has where all these moons are, and that is powerful.
Yeah,
that because then you say, okay, hold it, I see how this works.
That's right. That's right. And just take a look. It's nothing more than just emulating what you do here. This whole Tiger TV. You take a look at the growth that you've got going on with this.
Oh, yeah.
What we're actually doing for folks out there. It's a cool thing. It works both sides. I mean, we're so grateful for folks watching in or calling in or what have you.
Hey, and pretty soon, John's going to kill me, but folks, in about a week,
he's not there right now,
about a week or a week and a half, right, on every one of your phones, you're going to be able to get the TV. We already got it going in here, and we're going to release it, and you're going to just flip. I mean, it is so cool. You just hit it, bang, TV comes right up.
Yeah.
It's amazing. Let's go to David in Oklahoma. Hey, David, what's going on?
Hey, Tom, I got a question I got notice in my account they're splitting, reverse split and forward splits on some ETFs that I've got. There's got to be something more devious to that when they do these.
No, what happens is that they just get too low in price.
You wouldn't read anything else into it.
No, that's all it is. They get too low in price, and they don't want them low in price because the way that the structure is that they basically want them higher in price. So as they're going double or triple, what ETC?
Well, I've been trading that SRS.
That's the whole.
and I've been doing options, and obviously this certainly increases the risk.
No.
I mean, I understand the dollar amount's the same.
Right.
When you adjust it out, but. I mean, to go from a $48 stock from a $17 stock to a $48 stock is just a little different setup.
Yeah,
There's no risk for them to bust it on the downside. Is what
no, David, you're right. And what it is this: it is a head game too. Here, you stay right there. We'll talk about it because I know. Yeah, you got to be careful because when these to get at a higher price, bottom line, you want less on the table.
Right.
It's Tom O'Brien. This is TFNN. To Steve Rhodes. We get the Dow up 110. NASDAQ up 36. S&Ps are up 16. And get ready for FAILURE.
As Tom says, go long America. Now you can join TFNN and Barnes & Noble to keep money in your community. Purchase Tom's best-selling book, The Art of Timing the Trade, your ultimate trading mastery system, before October 31st from your local Barnes & Noble store. And you will be given access to not just one, but two exceptional archived courses. Tiger Scaling, The Tiger Butterfly, and Gartley. The Art of Timing the Trade is more than just a book. It's an educational journey that will help you understand the Wall Street greed cycle and learn how to recognize profit from genuine price moves. So, for the cost of just under $30, you will receive in excess of $300 in trading education from Tom O'Brien, TFNN, and Barnes & Noble. And you will be helping to support an important local business, your local bookstore. If you do not have a Barnes & Noble in your community, then go to your local bookstore. We'll be sure to work with them to keep your purchase local. So let's support our local businesses. Keep money in your community and get a great education. But be sure to act now because you only have until October 31st to take advantage of this opportunity. Go to the front page of TFNN.com for details.
you looking for some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Hi folks, this is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is for sale at Amazon.com for only $18.40.
Welcome back, folks. And don't forget, folks, you just heard that Amazon deal, but we do have a deal going at Barnes & Noble. We extended it to the end of the month. Buy the book at Barnes & Noble. You get $300 in free education. You need it at the store. We're talking with David from Oklahoma. We're talking about the SRS. Yeah, David, what you're going to have to do, there's no doubt, because when you're compounding the larger number, so when did they say they're here?
It revalues tomorrow.
Okay, so when you are compounding that larger number, it's problematic. There's no doubt about it. It doesn't have to be, but the hit on the other side, you got to be faster fingers when you compound the larger number. There's no doubt about it.
Well, they did the opposite. The AGQ, back on Bin Laden day was up around 400. And now it's around 100 or less.
Oh, listen, I trade. Listen, the SRS. Okay, if you pull the SRS back, okay, bottom line, it's traded at 1,400. Okay.
Yeah.
If you do the DUG,
right.
It is a funny story, man. I have a car that I call the DUG. And, that little baby, okay, exploded, from a price point of, let me see, this is sick. Yeah, from 144 to 356. So these things are, listen, they're great vehicles, but you just know you got to take your money very quickly.
Yeah, well, that's what the SRS just in the last 2 or 3 months has become, tantalizing to trade. I mean, I like to sell the options, and I like to sell the puts, and I like to sell the calls. But,
right. And listen, it's a shame because I know what you say.
I just thought to use your words. There's got to be something devious in what they're doing.
Yeah. No, it's they want
gotta create a little bit more. Maybe a little more volatility.
That's what they want. They want more volatility. They want more volatility.
Yeah.
And listen, Ryan, I agree with you. I love these things when they're at $15 because what happens is that you can feel like you're in more control. And I don't know if we are or not, but I feel the same way, man. You know what I mean?
Yeah.
That I'm not waking up in the morning down 20 or 30 G's. You know what I mean? It's like, okay, I can handle, some volatility.
Yeah, 20% on $15 is manageable. But
it is, but not on 70. I listen, man. This is what I do. I go to I don't trade those monsters. I get out of them and I move to the next one. You know where you can stop moving? I bet if in fact Shanghai is off the bottom.
Yeah.
Go into the Shanghai ones. Because that was the first one that was real.
What is it?
FXI and FXP.
Yeah,
for the long and short.
Exactly.
Okay.
I and P, okay.
Yeah, and you can have some. Well, they're at the right price. That's the bottom line.
Yeah. Thank you very much.
Okay, man. Have a great one. Have a safe one. See, it's great when and folks, what ends up happening here, what you heard there, that when you actually do trade these vehicles, right? It is dramatic when you go from a 15 to a 50.
Yeah.
And you better straighten out that position, man, because. If you're on the right side of it, it's beautiful. If you're on the wrong side of it, man, let me tell you something. Ba-boom. There's just, you just don't have a shot, $15, $20. You know what I actually like? What gets in, now watch how this works, folks. This is where you can get, here, we'll pull it up right now. It's amazing they haven't done it with the DZZ. The DZZ is a beautiful vehicle to trade. Because it's still going slow, but you can get the spikes, with 2 or 3 days. But you got to remember, so if you read the white papers on TFNN, if you go to, you're going to understand that they compound on the way up, but they get defensive on the way down, and that's why, like, the gold's up $20 and the DZZ's only down 8 pennies.
Yeah. Well, what I want folks to do is I want them to come to next Wednesday's webinar.
Yes.
Because what also is part of my calculations in an instant, you can see what the average true range is. That's the average daily volatility.
Right.
And you need to understand that when you're entering and exiting trades.
Big time.
You've got to understand that. So.
And folks, you can test drive Steve's letter right now. Money back guarantee. Get over there and do it. It's outstanding letter. You stay right there. Basil Chapman's coming up next. Then Larry Pesavento, David White, and back to Tampa, 4 to 6.
Thanks, folks. See you in the morning.
Are your cable rates rising?